Hey TSW Forex, welcome to another video. What an interesting week it was, at least so far, not was so far. There's only been 2 days going on to 3 days and we have seen a lot of volatility in the market. But this is what you're supposed to expect when you're seeing a range. And that is what the market has been doing for a while. So especially with gold. Now, I'm not going to do a full top-down analysis from the monthly time frame this time because by now I'm sure everybody should know the structure of gold. So we're just going to use, let's start on the weekly. Right, we're going to start on the weekly time frame. And what we can see is this massive movement up and retracement down. Now after that retracement, after that weekly candle, we can see that price pulled all the way up to this price level, basically half the movement that it did. Now, what happened is we've been seeing a lot of ranging, so the price is practically just moving within this range. And it was, if we were to use the rectangle tool and just mark the levels to which it was ranging in between, we can clearly see that it has been doing some form of ranging, right? So within these the limits of this rectangle, you can see that price is practically just ranging, going above or below and closing within this range of prices. So that is telling us that there's a lot of indecision taking place. Or most of the time when you get a massive movement, what you'll see is you see a range for quite a while and then some form of massive movement. And whenever you're seeing a range, there's a pattern forming. And if there's a pattern forming, there's an opportunity to trade, right? So we see price ranging on the daily time frame here. And what we see is this support level here was being respected. This support level here, right? We see price hit it several times. On the last time it hit it, it went up and make some wicks. So we're clearly seeing that there's a strong resistance level here. We're seeing that there's a resistance level here. Price is not breaking and closing above this level, right? Price went all the way up here and we saw inside bar happening on the daily time frame here. Whenever inside bar at resistance takes place, it normally go down. Inside bar at support, it normally goes up. I'm gonna get rid of this rectangle tool and go into more detail on the 4-hour time frame. All right, so we'll see this with a lot more clarity. And what we see here is what? All right, so the support structure, we just mark that with a support line. The lows that we have here, just mark that with a support line. What I expected recently was we're gonna get some form of where are some pattern of this sort. When price was these levels, this was what I was expecting. When I saw price rejecting this level, I was expecting price to do something like this. Came up here, come to the support, make a third touch, and then go up. But of course, we adjust to what the market does. So that price has been respecting the support level as stated before. And then we have these lows that we connect with this support line, our trend line. After that, we see that price is doing some form of ranging again, but however, we realize that it's forming a pattern and it's a head and shoulder pattern. If you look closely, this support level is first rejected, it broke, retested, rejected, went higher than this, create some form of double top, came back to support, it broke below the support, but it closed above. So what is that telling you? Not all the time head and shoulder are the patterns that we know in Forex. It's going to be textbook perfect. It's not going to be textbook or picture perfect. So what is going to happen is you will see some complexities in some of the patterns. Some are not even clear. But as it relates to head and shoulder, with this one, it's pretty evident. We have a left shoulder here, head, and a right shoulder to be formed. You go on an hour time frame, you see it with a lot more clarity. Now what we see usually on a right shoulder is normally we'll have a rejection of the 61.8 or the 50% sometimes, or any form of fib level. But I was expecting it at the 61.8. So we were to draw the trend line tool here, and you can see the 61.8 here is where the inch was, right at the 61.8. If I were to take it off the trend line, it still would be valid, but I wanted more confirmation, so I went on the 15-minute chart for that rejection and then enter the trade with the stop loss above and take profit. I just put it to the trend line. Reason being, when the neckline of a head and shoulder is broken, what normally happens is we have a retest of that. Now you're not gonna get that all the time, but you normally get a retest and a continuation down. Now how do we trade head and shoulder? Usually the length of the head to the neckline is what we use as reference. So we're gonna mark the headline, the head to the neckline, and then the length of that. And as you can see, price did break this level here. So this is how we normally trade the head and shoulder pattern. But for me, it is gold, and gold is very volatile. So what I did is just move my stop loss above the previous 30-minute close and trade it all the way down to this level here. So what I'm expecting now, let's get rid of this Fibonacci tool. What I'm expecting is some form of pattern to be formed, some form of, you know, maybe a rising wedge of some sort. That's one way to expect it, you know. This is one way to expect it. Some form of rising wedge and a short, or we can just have the retest of this level above here. So let's look at it in more detail. So what we can have is we get some form of patterns, you know, moving up to this level, either hitting this trend line or some support of over here. And if we were to draw the fib from the previous move, come down. And remember, gold is very volatile, so it can do anything it wants. So we can get the 61.8 retracement from that move here, from this complete move down here. We can have some 61.8% move. As you can see, it's respecting the 50% so far, and we can get that 61.8. It is still gold. Gold is very volatile, so I like to take it from places that I know I can get good risk reward. So you can either get it from the fib or some pattern that will form, and where am I expecting it to go? I expect the dollar to get stronger. Therefore, gold is gonna get weaker. It's gonna go for a short, right? So what I'm expecting to do is to have gold come all the way to this support level, which is the previous support here, or might even get it down to these levels. But for now, I'm just looking to short it to this level, which is the previous support here. So that is it. That's the gold short. Got that right shoulder with the pattern as confluence as well, and looking forward to drop more videos for you guys.